Yo, what's going on YouTube? I am Germ here. So this is a video that I am actually really excited to make because I've been telling you guys for 2023, I want to try and make different kinds of content. I want to try and make different kinds of videos. And today I want to dive a little deeper into the topic of Jim Cramer in the investing world, the finance world, the stock picking world, whatever. He's a very polarizing figure. Some people love him, hate him. Some people think he's entertaining. Some people think he's like really smart or well educated. Some people think he's an absolute idiot, or some people think he's not entertaining and you should never listen to him, or you should always listen to him, or whatever. But everyone has an opinion about Jim Cramer. He's highly influential. Obviously, he gets tons of views. People know him. He has some sort of influence, over the financial space. But a question that always pops up, and over Reddit, or on Reddit and Twitter and social media over the past couple of years, there's been this idea of like inverse Cramer. Like, hey, whatever Cramer says, I think he's an idiot. I think he's usually wrong, so I'm going to do the opposite. And then there's also, people who blindly follow whatever Cramer does. The people that like him, all that stuff. So I want to talk about in this video some recent kind of analysis and data and research and stuff that has come out of how good is Jim Cramer? Should you listen to him? Should you not listen to him? How well does he even do? So let's get into that today. I think this should be a pretty fun video. So this tweet from Market Sentiment, it's actually a tweet thread, and it's an article from marketsentiment.substack.com. I believe Graham Stephan either retweeted it or he liked it, so it popped up on my page or something like that. But I thought this was very, very interesting. I dove deep, into the whole article and everything. We'll go through some of the stuff, but this thread actually covers most of it. So I just wanted to run you guys through what Market Sentiment has to say. So Jim Cramer has made an incredible 21,000 stock picks in the last 7 years. That's crazy. That's so many. I mean, that is pretty insane, but it also gives us a really nice sample size to be able to base some data off of. The 24% CAGR claim for his hedge fund has never been independently verified, at least according to Market Sentiment. Don't know if that's true or whatever, but I'll give you guys, kind of the sneak peek before we dive deeper into the numbers and stuff. Don't want to waste your time too much. Hey, we love watch time, but Cramer's own portfolio has underperformed the S&P 500 since its inception. So if we're asking, should you listen to Jim Cramer, you're probably going to be better off just investing in some, broad ETFs, portfolios, that kind of stuff. Not necessarily banking on every word that Jim Cramer has to say, but let's get into some of the actual numbers. So to put Cramer's skill as a stock picker into context, an equity research analyst usually covers at most 10 to 15 companies annually, says Market Sentiment. 10 to 15 annually. We just went over. In 7 years, he's made 21,000 stock picks. Now, a lot of those are on the same companies, but a lot of those are on unique companies. So that's a lot. That's a lot more than 70 that, they're claiming that a normal research analyst would cover in 7 years is 21,000. Cramer was averaging close to 20 stock picks per episode. With 60% being by recommendation. So he will positively mention a stock 14% of the time, tell you to, or say you should buy them or recommend that you buy them 60% of the time, hold 0.2% of the time. Again, I get that he is making a show. He is going for entertainment value. Hold isn't very sexy. It's not very flashy. People say, hey, am I buying or am I selling? What am I selling today? What am I buying today? Give me some opinion, give us some headline, that type of stuff. Hold doesn't really do that for us. That's why he doesn't have very many holds. Obviously, he has negative mentions 14.6% of the time and sells 10.7% of the time. So consistently following his calls would be a nightmare for even the most seasoned stock traders due to how frequently he changes his mind. Not only how frequently he changes his mind, but how many picks there are. Again, if you're doing 21,000 picks in 7 years, just to even follow those is going to be like a full-time job, and you're going to be going in and out and having to constantly check and see how does opinions change, not only this week, not only today, but like this hour, this minute sometimes. And it's just way too much to do. And that's just, it's so active at that point. If you wanted to be this active of an investor, you would want to not just barely outperform the markets. You'd want to greatly outperform the markets for the type of time and effort and everything you're putting in. And again, if what Market Sentiment said is true and that he has underperformed the S&P 500 since, in this time period, then it doesn't make all this time and effort and driving yourself crazy worth it. But They consider the case of Netflix. He ended 2021 by stating Netflix is a buy, then changed his mind a month later. Once again in March, he said that it was a buy, and then changed it to a sell rating 2 weeks later. Due to this, it would only make sense to evaluate his short-term performance. So you can see every time he mentioned Netflix, he said buy, buy. Now he's talking bad about it. Now he's talking bad, bad, bad. Oh, now he's back to talking good about it. Now he says you should buy it. Now sell it. Now I'm going to talk bad about it. Now you should sell it. Now I'm going to talk bad about it. Hey, and now I'm going to talk good about it again. It's a roller coaster. But hey, his show, he can't just be talking about the same things every day, and the market sentiment about a lot of these stocks, especially over the past couple of years, has changed. And every once in a while he wants to tell people what they want to hear, ride that wave. Sometimes he wants to go against the grain, and those both definitely have a lot of entertainment and shock value and everything. So it just shows you, it's not like he's necessarily just going one way, even on individual stocks. Surprisingly, if you had followed Cramer's picks to the T, you wouldn't have lost money. So that's at least one good thing he has going for him. It's not like following Jim Cramer is flat out bad. It's not like if you did everything he said, buy, sell, all that good stuff, hold, whatever, that you would be losing money. You'd be worse off in the long run, anything like that. If your choice was, I'm not going to invest at all, I'm not going to do anything, or, hey, I really like Jim Cramer, I'm going to do everything he says, hey, you'd be better off still following Jim Cramer. But when there is alternative options of just investing in ETFs, mutual funds, all that kind of stuff, some whatever you want to do, SPY, VOO, VT Sachs, whatever, and just sit there and not have to get involved in all the craziness. Now, hey, some people love it. Some people, it's fun for them to be in and out of stocks every day, every week, whatever. Some people, that's, if they can't do that, then they're not going to do it at all. And hey, if you're ending up with less money in the long run, then that's probably not a great idea. But yeah, he did, make money off these picks. On average, his buy recommendations went up 0.87% after a month, and his sell recommendations went down 0.15%. So overall, he's telling you to buy stuff that's going up. He's telling you to sell stuff that's going down. That's pretty good. That's not so bad. It could definitely be worse. If his buys were going down, his sells were going up, this would maybe be a whole nother conversation. So this is a big asterisk here, one possible explanation that they give for his brief outperformance is that Cramer's Mad Money has more than 200,000 viewers. Even if 1% decide to act on his stock tips, it's big enough to move small stocks. This phenomenon is well studied and is known as the Cramer bounce. Graduate students from Penn published a study claiming that over time, the average next day increase for a stock that Cramer recommended was 3% for the entire study sample and almost 7% for smaller cap stocks. They proved through the use of electronic communications network that most trades came in after 7 p.m. Eastern when Mad Money had concluded. So that's kind of going not in his favor because, hey, they're saying, when he tells people to buy or sell, people then actually go out and buy or sell. And obviously with how the markets work, if a bunch of people buy, things are going to go up. If a bunch of people sell, things are going to go down. So that would actually be, against his stock picking skills or his abilities or whatever. And when you look at these numbers of like, hey, his stuff's going up when he says buy, stuff's going down when he's saying to sell. If you started to reduce those even more, hey, maybe things aren't looking so good all of a sudden. But that is what happens. We can't totally act like that's not what happens. It's going to continue to happen, likely. So it's hard to not factor that in. While his standalone performance looks good, it's a completely different story if you pin him against the S&P 500. Except for the one-day buy recommendations, you would have gotten a better return just investing in the market every single time. So Cramer versus the market. In a one-day time period, he outperforms the SPY. If he tells you to buy something, it does better than SPY for one day. Now, a positive mention, not the same. It actually does. He underperforms. Now, as we start to branch this thing out, again, in one day, he has some effect on the market. In one day, people are going to buy and sell. People are going to listen to him. But when we broaden this thing out and we look, 1 week, 1 month, he starts to underperform the market in just 1 week. The stocks he say to buy, you'd be better off just holding the S&P 500 or the SPY or the VOO or whatever you like. And in 1 month, it gets even worse. And I assume if we extrapolate this out further, it's just going to get kind of worse and worse over time, where in the short term, the very, 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 very immediate short term, he does okay. He might beat the markets a little bit. He might underperform a little bit. But as things get wider and wider and wider, just as most stock pickers and people who pick individual stocks underperform the market, it seems like Jim Cramer does that as well. It's often said that everyone is a genius in a bull market. 2022 was anything but an easy year for equities. So how did Cramer do in 2022? It was definitely a hard year. All his buy and positive mentions lost money across all time periods. His buy recommendations on average went down 3% in just 1 month, and positive mentions were down 5%. If you invested in the market instead of Cramer's calls, you would have scraped by with a 1% return. Okay, so here's the same graph over 2022. Again, all the periods are in the red. Over 1 day, 1 week, 1 month, his buys and his positive mentions all underperformed the market. You would have been better off with the S&P 500 in any of these time periods. So 2022, it was a rough year for a lot of individual investors, a lot of individual stock pickers, a lot of individual company stocks, everything, even the market as a whole. But even in this year, you still would have been better off. So in the good years and in the bad years and everything in between, it seems like Cramer is he just underperforms. That's what this research is telling us. In the end, we believe that all of us give undue importance to stock picking influencers. We should all see Cramer for what he is. He is an entertainer. That's 100% fair, and he does a good job entertaining. He gets people talking. He keeps people excited and interested in the markets and in finance and in stocks, which is, at the end of the day, a great thing. That is a very, very good thing. There is some place for that in the whole ecosystem. But just maybe you want to consider the fact of whether he is all that great of a stock picker, and if you want to abide by every single pick or word or whatever he says and take it as gospel. The final nail in the coffin is how Cramer's own portfolio has performed. Researchers at Wharton found that both since inception of the portfolio and since start of Mad Money in 2005, Cramer's portfolio has underperformed the S&P 500. I guess that just about sums up everything that they had to say, and here you go. Growth of $1,000 of Cramer's portfolio versus the benchmark in the last 17 years in 5 months. Not the last, but from 2001 to 2017. If you invested $1,000 in August of 2001, 17 and a half years later, you would have 1975 with Cramer. Again, you're still making money. You're not worse off in the end. You're not losing money, but you do have significantly less money than if you just stuck it in the S&P 500, set it and forget it, and got on with your life. But that is pretty much it for this video today, guys. Hopefully you guys did enjoy this one. A little bit something different, a little bit fun, a little bit interesting. Obviously, Jim Cramer is always fun to talk about, and he always gets, people excited from both sides. I do think so. I don't know. I do hope to make more different kind of content and stuff in the future. This was one Twitter thread that really got me excited. I really wanted to present this information to you guys. I think it deserved more eyeballs. You guys should definitely check out their article on Substack and everything like that. It goes even more in depth. Hopefully, I catch you guys in the next one. But until then, peace.